Morning, everybody. How's everybody doing? All ready for another day of carnage? Very slow start this morning on the indices, but we'll see. How's everybody doing? Who made some money last night in our friend FOMC? Bit of an odd one last night, wasn't it? A bit of a delayed reaction to it. Mainly, most of the movement came in the press conference. So, fairly interesting moves last night. Let's have a quick look at it. So we got the initial spike up on the FOMC. They just basically took all the liquidity. So this is absolute textbook. Morning, Rahat. Nice sunny morning you got there. Ours isn't. So they basically just took all the liquidity on the news and ran away with it. So big push down. We are recovering a little bit this morning. Same on all indices. They all did pretty much the same thing. DAX, big gap down this morning. And the Dow, same thing. So obviously did the same thing across the board. So yeah, really interesting one yesterday. US dollar, big push on the US dollar. Euro US dollar came down hard, still coming down this morning. Morning, Jacob. Morning, Llewellyn. So yeah, big one. Morning, Terry. I'm curious as to why anyone manually trades these days. Because that's how everybody does it. Don't know. Don't know anybody that makes money with an EA and sits on a beach, but would be nice. I trade using an EA, but I don't. I still manually trade. Obviously, I still need to look at the charts and decide what I want my EA to do. You got to do that. EA just automates my entries for me, but you still got to do the analysis and decide what you want your EA to do. Because obviously the market changes, as we know. Yeah, everybody's been buying this for 2 years. They're not anymore. Your EA isn't going to know that. Your EA is going to blow your account up if it's set to long the US S&P, isn't it? So you still got to manually trade. So this morning, I just wanted to spend a bit of time this morning before we do the analysis on a kind of reality check, and kind of ties in with what Terry's just said. As well. I get a lot of DMs. I've got 4,500 members in the Telegram group. I had 169 profitable trades yesterday using an EA. Good for you, Terry. Send it over. Send it my way. I'd love it. So basically I get a lot of DMs in the Telegram group from people. And we had a couple. I had one last night. I had a conversation with, had to get rid of him in the group because basically he was just spamming all my members with a dodgy signal service. And I've got people, somebody this morning said, I've got $4 in my account to trade with. How do I make money? You don't. And I get a lot of people asking for money and discounts and all that sort of stuff. And I just wanted to do a quick reality check for anybody, and I'm probably going to clip this out and put this on a separate video on YouTube as well, because it's very, very, very important people understand it. If you want to make money as a trader, you can't just buy an EA like Terry's that does 169 profitable trades. That's going to blow his account up in the next couple of months if he carries on using it, because they don't do that. There aren't EAs out there that work constantly without human intervention. Right, and everybody's selling this dream. So I just wanted to do a little bit of a reality check on what you actually need as a trader to make money. If you want to do this as a job and you want to make a profession out of this, I just want to cover what you've basically got to do, because there's so many misconceptions out there, and I've been through the mill trying to be a trader for over a decade, and it's taken that long for me to get there. And the reason being is because you have to put in the time on the training. So there's a couple of things that you need to have a checklist of, okay? And I'm just going to cover them quickly. And you need to ask yourself this question, right? So the first question is going to be, do you want to be a professional trader? Do you want to make this your living? Right? That's the first question you've got to answer. Do you want to do this as a bit of fun? Do you want to do this as a little way to earn a little bit more money a month? Or do you want to do this as a job? Do you want this to replace your 9 to 5? That's the first question you've got to answer. And until you know the answer to that question, you're never going to be able to make any money in this market, because all you're going to do is flit around trying to find the thing that will help you. But basically, sorry, Terry, I can't... I'm in the middle of something. I can't really talk about EAs. So basically, you've got to answer that question. So first of all, if you want to use trading as an additional income, that's no problem whatsoever. What you've got to do is you've got to find a strategy that you can use long term, because you're going to work all day long, right? You're not going to be able to look at the charts. The first thing you've got to do if you want to make money as a sideline trading is you've got to concentrate on nothing but H1 and H4 and upwards, right? So those are your time frames. So that's basically the first question. If you want to do this as a job, you've got to then also make sure that you've got the finances to do this, right? So going to use the analogy of the surgeon, which I've used before, and you've probably heard this, some of you before. Surgeons, when you want to become a surgeon, they don't just put a scalpel in your hand and say, go and open that guy's head up and do some brain surgery. Yeah, you have to spend 7 years learning how to become a surgeon, and then you come out and you get the big bucks. You earn 6 figures a year, fantastic, but you've put in 7 to 10 years of hard graft to get there, and you probably then have to come out and go through the lower levels, right? So this is exactly the same. Yeah, you're not going to come out and earn 6 figures a year as a trader unless you've put in 5, 7, 10 years of graft. Just is not possible. And the dream that everybody's selling you on YouTube is not there, right? So that's the first question. If you're going to use this as a part-time income, then no problem. You just need to concentrate on higher time frames and find a swing strategy that works. You're not going to make a massive amount of money, but you'll make some decent side money, yeah? And it'll work really well for you because you're trading higher time frames, which are more reliable. If you want to do this as a job, right, the first thing you've got to do, the first question you've got to answer is, number one, income, right? How much do I earn at the moment? And how much do I want to earn? So that's the first question you have to have answered. For me, I'll be totally honest with you. If I'm earning less than 5 to 10K a month, right, I can't pay my mortgage, my bills and everything, right? That figure is going to be completely different for you and for somebody else. If you're in a different country, say if you're in South Africa or you're in India or something where income's less, cost of living is different, that's going to be a different figure for you, right? So first thing you do is find out what that is. So pick that number now in your head, or write it down on a piece of paper, and decide what it is. So I'm going to say bare minimum to feed my kids and pay my mortgage, right? That's what I've got to earn a month, yeah? So an average professional trader, yeah, will on average make somewhere around about 80 to 100% return on their account a year. Yeah, somewhere between 5 to 10% a month is good for a trader, right? All these people that say they can make 60, 70, 80, 100% return. Yeah, I'm on 24% return this month. I'm over leveraged on this account, right? So this is, I'm trading, I'm scalping on this account as if it was a big account. So ignore these figures. But what you need to do is figure out what you need as a starting balance if you need to earn that, right? So to earn 5K a month, let's say, for example, you're a really good trader and you're managing to get 10% return a month, you've got to start with a minimum of a £50,000 account or whatever your currency is, right? So to start as a professional trader, to earn that a month, you need a minimum of a 50K starting balance. It's just simple maths, isn't it? If you're going to risk properly and return properly, you've got to have a 50K starting balance. If you want to be safe, I'd go with 100K. That means you've only got to return 5% a month. That's easy, isn't it? Everyone can return 5% a month. Yeah? So if you haven't got that, you can't become a trader. There you go. Easy, isn't it? Simple maths equation. There's ways to get this. You could go to a prop firm. Okay? You could go to a prop firm like CTI, FTMO, Topstep, Apex, who I trade with. There's loads of them out there. You can go to a prop firm and they will give you this amount of money. But to get that amount of money, you have got to prove to them that you can trade. And to do that, you have to pass an evaluation. And these evaluations will cost you somewhere between about £300 and £500 a month. Okay? And you've got to prove to them that you can pass and you can be a successful trader. So to get a 50k account, there's other ways of getting it. You could spend, let's say, £500 a month doing an evaluation with a prop firm to prove to them that you can trade, but you're not going to pass first time. So on average, people that pass prop firms, and this is, you can go and find these figures out yourself, the average is $2,500 to pass an evaluation, including resets, trying different prop firms and everything that you go through. So if you want to go the prop firm route because you haven't got 50k in your bank account to start trading with, and you need to earn 5k a month, you've got to at least have $2,500 so that you can go and get a prop firm account. And that is if you can pass it, because they are really strict. The drawdown's strict, the targets are strict, the time limits are strict. It's the hardest possible trading conditions you can have as a trader. And if you're not a professional trader at the moment, you're trying to get a prop firm funding, that's even harder than trading with your own money. And let's say you do that and you get this 50k account. You've now got to hold it. Right, so the first month trading live account with 50k that you've never ever traded in your life, the psychology is going to be all over the place. Yeah, the first time you start trading with 50k real money, your brain will be going, take every penny I can get, and as soon as you see a tiny little profit, you'll be jumping on it. You won't be doing proper risk reward. You won't be trading as you were when you were trading in evaluation, because evaluation is just a game. When you get real money, it's a completely different story. So if you pass the prop firm and you manage to then hit a profit target and get a withdrawal, most people who pass a prop firm evaluation lose that account within 1 to 3 months. Why? Because even professional traders, and you saw it with me last month, with this month, have to take a big loss every now and again, because we cannot sustain a winning run of 3-4 months. We have losing months. We have losing weeks. At some point within 1 to 3 months on your prop firm account, you are going to hit your max drawdown, which means you then have to go back to step 1. 2 things are going to impact you here. First of all, you've now got a month where you're not trading real money, therefore you're not making an income. So you're not going to make this 5k. Second thing, you may have to spend another $2,500 to get there. If you didn't make $2,500 off your prop firm account, basically you're just back to square one. So we're somewhere between 1 to 3 months into our trading career, we've made 0. Okay? And that is the reality. And I wanted to do this because I keep getting these DMs and people saying, I've got $100. Where should I start? Don't. Get a job. This is not the right career for you. Okay, this is the reality of what it takes, and this is what I have been through over a decade. And you might think, well, he's not as good as everybody else, and that, you know, might be true. I'm not the best trader in the world. I don't pretend to be, but I just want to give you a reality check, because so many people think that they can just basically magically become a trader and make 6 figures a year. I make 6 figures a year, but it's taken me a long time to get to that point. The other thing I just want to point out as well is if you want to become a professional trader full-time, you've also got to give up your job, right? If you want to make 5k a month, you've got to at least be consistent and profitable for 3 months on the trot. So let's say, for example, you don't manage to get 3 months on the trot consistently. You need to have savings of at least 3 months worth of mortgage and food for your family before you even go professional and give up your job. So not only have you got to find 50k if you want to make 5k a year, you've also got to have 15k in savings just in case this doesn't work out, because you've still got to pay your mortgage if you make no money for 3 months, and then you've got to go and get a job. Right? So I don't know what your figures are. Let's say you're 1,000 a month, or you're, I don't know, you need to make $2,500 a month. Do that maths equation. figure out if you can become a trader, because I hate people wasting money, basically. And I just want to be honest with you about what is going on in this industry with all these scammers and these people that are trying to flog signal services and all this stuff, promising you the dream. That's the reality of it. Yeah. So there you go. I've said it. Got it off my chest. Because I've said that to many people in Telegram over and over again. So I just want to make this video so I can stick it up. And basically every time I get asked that question, which is 2 to 3 times a week at least, I can just send them to this video now. Yeah. Anybody got any comments on that? Anybody think that's not right? Or anybody experienced different? I don't know. Let me know. That's just my journey and my take on it. And just before I finish that, the other thing I want to say about is signal services. Yeah. The reason signal services don't work, and they look great, they look really good. They show you profit. You know, like Terry, he's got this EA that's done 164 trades and made him a fortune. Yeah. Set up a signal service for it. No one will be able to follow these signals, unfortunately. Okay, unless you're a full-time trader, because the signal will come in, right, and it will be to buy GBP, US dollar at whatever level, TP, stop. Yeah, so you'll set that up, and then 1.5 hours later, a signal will come in and it will be close that trade because it's not quite got where we thought it was. You didn't see that, so what's happened? You hit loss. They bank a profit. So their P&L is different to yours. So regardless of whatever a signal service says to you, yeah, you will never, ever, ever get exactly the results of that signal service. And if that signal service is creeping out a profit and making, 2%, 3%, 4%, 5% a month, your P&L will look like that. First of all, you're going to get slippage. You're not going to get the same entry and exits as they are. You're going to have different spreads, different commissions, if they even account that into the signal service. And you are not going to take every signal. That 10 to 1 runner they have, you missed that signal. 10 to 1 runner made up 80% of their profit that month. You missed it. So what's your P&L do? That. That's why signal services don't work. If I couldn't even tell you how many signal services I've tried over the years. They all looked amazing. Not one made me money. And do you know what signal services also do to you? They make you cross and angry. And angry traders revenge trade. So when that signal service that's P&L looks like that, makes your P&L look like that, what's it do? Make you cross. What does that make you do? Over leverage. What happens when you over leverage? Nuclear explosion. Okay. If you want to make money as a trader, learn to trade. If you want to learn to trade, give up 2 to 3 years of your life and then decide if you think you can make it and then go full time. We're not going to do this in 6 months. It's just not going to happen. Rant over. But I just wanted to let you know, that's my opinion, my experience. Don't take my opinion, don't take my experience, doesn't matter. Yeah, I've been trading a long time. I've just been through the mill. I'm just letting you know what you're letting yourself in for, right? Do this part-time for 5 years. After that part-time for 5 years, if you haven't got at least 3 months break even, it's probably not going to happen. I've given up 3 times in 13 years. Yeah, I just came back to it over and over again and finally went, aha. And it will destroy your mental health. It can destroy your home life. It can destroy your family. It can destroy everything. Yeah. This thing's a drug. It's like gambling. Yeah. All these people that go into the bookmakers and, they're betting on the horses and the dogs all day long. People playing pokey machines and, like fruit machines, as we call them in the UK. Pokies are in Australia. They're addicted. This is an addictive thing because you get that win every now and again where you hit that button, you get this bang, this big one. Yeah, I'm on the DAX at the moment on a gap fill. Yeah, I'm playing this gap fill on the DAX at the minute. All right, what's my P&L at the moment? 4%. Yeah, this trade's playing out beautifully. I'm not going to do this every day, right? But I'm going to hit this and go, yes, awesome. I'm an awesome trader. I've banked 5% before the market's even open this morning. Yeah, it fills you with that. And then all of a sudden, I'll have 3 days where every single gap play will go boom, and I'll lose. Right? And that makes you cross. That makes you revenge trade. That makes you overtrade if you're not experienced and used to it. So yeah, anyway, that's all I wanted to cover. And I just wanted to cover all of that because, like I say, it's just something I get asked constantly. And I thought if I do a little video on it and I put it up, hey, I can just send people to that rather than writing the essay that I seem to write every week, you know. And I don't want to be harsh. I don't want to put people off, but I want you to know what you're getting yourself into. Yeah, this is not an easy job. I didn't pick this as a job. I just love it. But, you know, there's easier ways to make your money. A lot easier. Anyway, let's get on with analysis. That's done. As Trump says, never, ever give up. Whatever you want in life, don't give up. Perfect, Adrian. Yeah. If you want it, you will work for it. And it's, as I say, it's a massively rewarding job when you do it. When you get it, when you crack it, it's brilliant. But the road to it is hell. I'm just going to cover that. Right. So, analysis time. ADRs. So we had a look at the S&P. That was really, really down. Oh, that's something I wanted to cover quickly. S&P, right. So just doing a little bit of analysis on the S&P this morning before we came on. There's a lot of people at the moment saying we are in the initial stages of a collapse, which it looks like. It looks doom and gloom at the moment. I totally understand it. But the actual movement that we have just had is actually typical. If you look at it on a weekly chart, these big, deep, horrible pullbacks, yeah, is fairly normal. And actually what is happening at the moment is all we are doing is retesting the September lows on the S&P and the July lows. Yeah. So all we're doing at the moment, as you can see on the S&P, is retesting this level and it's holding. Okay. So from a support resistance perspective, this is a spot on long. All right. I just wanted to point that out. If you look at it on the monthly as well, I think it probably looks even cleaner on the monthly. Yeah, right. Here we go. So we're going back way longer here. We're going back to 2011. Look at all the other crashes that we've had, or say crashes, the big potential bear markets that we've had, and what they've done. They've retested a previous level. Yeah. Big drop there, big drop there. Those lows held, pushed. COVID was a bit of an anomaly, wasn't it? But look at where we are now with this massive monthly candle. The only equivalent we've got really is COVID. And yes, there is a potential for this to happen. But this was the biggest humanitarian crisis we've had in a generation. Caused that. This is not the biggest humanitarian crisis in a generation that we're going through at the moment. So this level is holding at the moment. So we'll see how we end up. But to me, this just looks like a deep pullback, and the market is wanting constantly to rally away from this. And we've just put in new market structure today. Look at where we are today. I'm just about to hit TP on my trade. I can just tell because the US is going up, the DAX is going up as well. We're putting in market structure to the upside here. We need to break this high. We've got another week of earnings. We've got big earnings releases today, and we've got another week of earnings coming next week, which tends to rally the market. So if we can make a new high here, I'm not sure this is the start of this horrible, massive, big bear market that everybody's talking about, where they're talking about a minimum of a 20-30% sell-off. But we'll see. As I said before, we're either going to get this or we're going to get this. One or the other, isn't it? So when we get back to the 24 on the daily, that's when I'm going to start really paying attention So we've got a fair bit of movement to the upside yet at the moment, haven't we? So, and that's the same across all indices. Yeah, we're finding support. You know, at the moment, see where we end up this week. We've got 2 full days of trading. If we get 2 bull days coming in here, we're going to end up with a bullish weekly candle. So I don't think it is as doom and gloom as many are saying, potentially. But look at this move we had, the 2018 crash. Let me just measure that. What's that? 18,000. We've done 30 already. Yeah, this is not a crash we're in at the moment. This is just some weird, massive correction. So, anyway, I just wanted to bring that to your attention. For any of you that are sitting long on the indices at the moment, a little ray of light, if you like. So this low here, this is where I would look at potentially aggressive buying down here. Think W's. Yeah. Reverse alert retests. But we'll see. Today is a big day. Just going to hit TP on that, am I? Oh, come on. Nearly there. I'm not going to be able to concentrate if that's. I'm just going to shut that. I won't be able to concentrate if that's running. So, want it in the bank. I made a little bit of a loss yesterday, as you see. I was up 10% or something yesterday, and I stupidly tried to trade the news. I told you yesterday, don't trade the news. What did I do? Traded the news. What happened? I lost half my profit. Don't do it, guys. Right, ADRs. So I've got a few hits today. Chirp in if you want to ask any questions, or you've got any pairs or instruments or anything you want to look at. Euro New Zealand. Already missed it, unfortunately. Beautiful ADR hit, 100% ADR. Beautiful reversal, collapse. Missed that one. God, what time did that play out? End of Asia. Nice trade. 60 pips already. 3/4 of an ADR off of that. Pound New Zealand. Obviously, I assume that's going to be the same. Yeah. New Zealand dollar weakness coming through at the moment, which is pushing all this down. New Zealand Swiss. Oh, of course, we've had news, haven't we? I'll cover the news in a minute, guys. I've missed the news, haven't I? That's me going off on a rant this morning about the reality check. So ADR bounce on New Zealand Swiss. We've missed all of these today. They've all played out, unfortunately. If you got anybody got on any of these this morning? Beautiful. New Zealand US is the other one. That one's only just alerted on M15. Plenty of room to the upside on these. I did not miss the Euro New Zealand. Diamond has been on Euro New Zealand for a century. Nice one. Did you get in with a decent sized position on that? Lovely liquidity run, look. Nice. Bearish engulfing going in on the 4 hour. I've got an hour left on that candle. Looks looking good. So news-wise, we had obviously FOMC yesterday. We had the CPI for the New Zealand dollar, which is what made all that New Zealand dollar movement. Consumer price index is up, so a little bit more than expected. So nothing dramatic. It is a reactionary indicator. It's not a leading indicator. So the consumer price index is affected by monetary policy. Yes, 3 times position. Very nice. Now the question is, how long can you hold it? It's coming down like a steam train at the moment. Wait till you don't get out of this until you get, I don't know, could go 30, 15 maybe. Just look at the candlesticks, yeah. Inside, you are forbidden to take profit on this until you break and hold above. Bullish engulfing, yeah. If you get inside bar, like inside bar after inside bar, you're not allowed to get out, right? You only take a profit when you break above the previous bar. 100% ADR drop to the downside off of that. Hold it. So that's all the RSIs today. All the ADRs today. News-wise today, we've got GDP at 1:30, an hour before the New York Open. That is a biggie as well. So we quite often get a big shake-up on that. And we've got loads of other US dollar news coming out at the same time. Pending home sales doesn't tend to do anything. Building permits is much more impactful than pending home. So that you probably won't get a lot off. GDP, though, we quite often get a reaction. If this is massively out from forecast, then we tend to get a big move. So that was pretty big, that one. So if you're within a couple of percentiles, yeah, so it was 6.8. If you're within sort of 3 or 4 percentiles of the forecast, it doesn't tend to do an awful lot. If you're a couple of percent out, we tend to get big reactions. So we'll see what happens with it this afternoon. We're a percent out there, look. That was negative, but it was 0.1 out. Doesn't really tend to do an awful lot. It's when we get the big unexpected GDP announcements that we tend to get some decent reactions. So keep an eye on that one this afternoon, 1:30. We should get some US dollar movement. We'll have a quick look at the Dixie, which is because I haven't got Dixie on the Robo Forex. It's Euro US dollar upside down, so you can tell what it's doing. Euro US dollar. So with the Dixie, we had this big accumulation, as we know. We pushed out up into a resistance, and then we came back down. Remember, I said we were looking for US dollar strength to take us beyond that range when we've cracked it. We are now, though, double bottoming, potentially. So, but on the Dixie, let me just see if I've got, I haven't got an Axie account open. What's that? CMC. Let me just see if I've got it on CMC. One sec. US dollar index. No, I don't think I have. But basically, it's Euro US dollar upside down. So we're breaking that level. So this is where we need to be looking today for Euro US dollar especially. But if we get that bounce, and we are likely to get a bounce, and that will probably be GDP, which they will use. What I'm looking for is a pullback and drop and continuation on the US dollar strength, which brings me nicely onto our friends in the yen. The yen, we would expect to start a power up move along with the US dollar a lot of the time as well. So we have had a bit of a movement, as you can see, but on some of these, but it's kind of pulling back. So at the moment, nothing yen wise, but I'm still looking for shorts on everything against the yen at the minute, ideally. So good moves on US dollar yesterday off the back of FOMC, and hopefully we get a continuation on those today. And so there's a few people yesterday were in US dollar CAD long. God, did you hold it? Is the female DJ in here who was in here yesterday? Got in long. Do you remember I said, guys, textbook, guys, if you really need to pay attention to what I say. Textbook, what did I say was going to happen yesterday? Right, we got that reversal alert. What did I say was going to happen? It'll fade that gap and then explode. So yeah, did you hold that? Anybody got that US dollar CAD that we were looking for? So this US dollar CAD, we were looking at an entry back here, and then we retested. And I think it got hourly extended, didn't it? Oh, not quite. Yes, it did. It got on the hourly yesterday. We got an extension on just below the 32, I think, didn't we? Lovely trade. Lovely trade. Anyway, right, let's get on with the 4 hours. So Aussie dollar. Aussie dollar, US dollar. Big move down on the US dollar strength. So we're in a downtrend. Remember, I was looking for shorts on this one. We got the gift yesterday, I made loads on the EA trades yesterday. I'll have a look. I'll go through the EAs in a minute and show you what they all did. But all did really nice money yesterday. So yeah, all pushed down very nicely on the Aussie US. We're extended now, and we're coming out of this little buy area here. So as I said, on the US dollar, after we get a big strong push, we tend to get a pullback. This is the pullback play. I would rather be shorting this than longing it. We've had a reversal alert and it's put in a nice pullback. Highly likely we're going to fade that. But it's got to do a 125 ADR move to get there. Whether or not the US dollar will allow that with GDP, if we get positive GDP numbers for the US dollar, this thing's probably going to come back down. So this afternoon, 130 will be key for that one and for all the US dollar pairs. Euro US dollar, very low. Wouldn't long the Euro US dollar. Always shorten it. Take it at your peril. We've got the strongest currency in the world against probably the weakest currency in the world at the moment. You do not want to be long in this. And if you are long in it, get out fast. That's the pullbacks. Yeah. After a move like that, a pullback like that, you just, big move. It's more of an accumulation than a pullback. So, don't long it. You probably will get a profit out of it if you long it because it's got loads of targets. But it's such a risky trade at the moment with the US dollar strength. Wouldn't get in the way of that one. Pound New Zealand, nice extension. To the upside, reverse alert going in at the moment. Bearish engulfing going in at the moment on that one. You'll have had a reverse alert on M15, which is also retested. Hourly, you're just about to get the reversal alert as well. So really, really nice move back off of this New Zealand push. So obviously the New Zealand had a very weak reaction off of the news. And again, this is why I say over and over again, we don't pay any attention to the figure. The figure has nothing to do with price movement 90% of the time. The figure is basically there to tell us what the result was. The market will then move that currency or whatever related currencies in whichever direction it needs to make money. And obviously when you get positive news on the New Zealand dollar, you expect the New Zealand dollar to go up, don't you? But no, the New Zealand dollar goes where it needs to be taken. In this case, it was down. So nice reversal on that one. That was the entry off of the 4 hour. So if you were watching this on the 4 hour and you watched the alert this morning, you probably would have been getting into initial positioning on that one. Depends on what your target is, but I mean, you've got 3/4 of an ADR there. ADR back down to here. So if this one puts in an A-shaped recovery, you could be out of that today. Nice quick trade. Obviously, we are bullish on the pound. So this is counter cot. Again, if you're paying attention to the commitment of traders, this is counter, obviously, because the commitment of traders is long pound, short New Zealand. Pound US dollar. Nice push down. Again, don't really want to get in the way of the US dollar after FOMC. Probably are going to get a pullback, and it looks like that's what's happening at the moment. So again, this is counter trend. Highly likely we will fade that move. If we don't fade it straight away, typically it will take 2 or 3 days. So some point mid next week, we'll probably find that we pull back up to that. So it is a nice looking long opportunity, but I don't really want to be going against the US dollar ideally at the moment. But short term, that's got some room. Yeah, we're going to play the pullback on this move. But I'd rather be waiting to get in short on it when we pull back. New Zealand dollar yen, massively extended. We've just taken out, so this New Zealand dollar yen on the 4 hour, this has been a real nightmare, this one. I'm so glad I got out of this. We got massively extended. We had this push down, which was strong. And then we had this really, really strong push down to here. But we've now got a really massive bull divergence forming at the moment. So there's a lot of buying pressure coming through, and we've made a new lower low. So it looks to me like this is about to pop. We're probably going to pop back to the 24 and back up to this area here. So this one, if you've taken this one long, don't know if anybody's got on this one, you're probably already in it because you were in it back here. So this morning was a nice add. And we're off to the races today. So we need to break, obviously, above this level and hold and then pull back and then push off again. But it looks good. Looks really nice on the hourly as well. So this price action obviously has taken us back above these accumulation areas. And, you know, after this big, strong push down, we're due quite a big pullback on this. So it looks like a lovely long, but obviously we just missed it this morning. Kind of missed everything this morning, haven't we? Because it all happened in Asia. But if you were up, you're probably in. For your accounts that have the EA running on, do you have the euro pairs only shorting the EU? Yeah, we'll have a look at them in a minute. On the COT bias ones, I do, yes. On the H1 M5s and that, no, because they're much smaller, faster moves. But again, yeah, I mean, this is what I come back to. If you want to, and you want to stay in line with COT, then yes, that's what you would do. But I'm letting them run because people want to see what the EA is capable of doing on its own. And like I say, I would never trade with it like that. But, you know, people want to see it. New Zealand dollar, US dollar, which I understand. New Zealand dollar, US dollar, again, big pullback due on this one. So we've got 4 hour extended off of the back of FOMC. I've got prop firms in my head now. Nice ADR hit. This area here is going to act as a resistance if we get there. Likely we will. We're either going to fade it straight away, and today is going to be a weak US dollar day. Or the other option obviously is that they use GDP to push up into this area. If they use GDP to get up there, then that's a lovely short opportunity. So either way, if you're taking this as a long, because it's a really massive extension RSI, it's starting to play out. Just be very careful and keep an eye on it, because obviously we've got a very strong US dollar out the back of FOMC. Highly likely we're going to find support in one of these areas. Resistance. Yeah, so just keep your eyes peeled. But we've had the reversal alert, not looking like we're going to get a retest on it. A little bit of accumulation there as well. Second move down. But obviously this second move down has been caused by the New Zealand dollar, which is obviously reverting at the moment. So looks like a lovely little long. May get a retest. If it retests, you might have an opportunity to get in long on that one. But 4 hour, very, very, very extended. So Euro US dollar and New Zealand dollar US dollar. Obviously, big weak moves on the Euro and the New Zealand, which we've been seeing over and over again, coupled with big strong move on the US dollar off the back of FOMC. US dollar CAD, short. So again, I'd much rather play along on this one, but it's already playing out. Everything's played out already this morning. Bit late to the game. If you've got into all of these, fantastic. But a lot of these are playing out already. And again, look at these gaps with a big, strong move. Highly likely these are all going to get faded today, which we do a lot off of FOMC and non-farm. If we do manage to push and hold, we fade them at some point. So this looks like it's the fade day today. And US dollar Swiss. Big strong push again to the upside. Again, I want to be longing US dollar, so not ideal for a short. Looking at levels on this, we are coming up to very interesting areas up here. This gap obviously is the big start of that Swiss franc strength that we had coming through, which has been multiple tested. We're coming right up to that level. When we got to this level before, we didn't have a strong US dollar. Now we have got a strong US dollar. So I would probably expect a bounce, but this time will probably be the time that we crack that level. If we get a push up above straight away to 125, 150 ADR today, that'd be a nice little short back down to potentially this as support. But look at the strength of this move. It's very rare we get a big strong move that doesn't get retraced within a few days. This one has taken a week or so to retrace. And here we kind of retraced back to it almost straight away, and we came back to it again, so propulsion moves leave a lot of traders left to the wrong side. And when I say traders, I mean institutions, hedge funds. They push price back into that area. So we've got all these down here as well, which potentially are going to get pushed back into. So if we get pullbacks today down to here, lovely long opportunities. So lots of good setups on the cards at the moment off the back of that movement. So you can think of the elastic band analogy that I teach in the bootcamp. We are massively extended at the moment. With massive extensions come big pingbacks. Put your fibs on. Look at roughly where we are likely to pull back to. 38s, 50s and 61.8s being the most common. So start getting in short when you get reversal alerts on them. If you are so inclined. But again, up to you on the COT bias. Yeah, if you want to ignore COT bias, take shorts. You can ignore COT bias a lot of the time, remember, because it is a very, very long-term view. I just prefer to try and line myself with it if I can. Right, so that's it for analysis this morning. So we've covered all the 4 hours. Hourlies, obviously, it's the same stuff. Actually, US dollar yen's extended on the hourly, which is not extended on 4 hours. Let's have a quick look at that. US dollar yen's just coming up to potential double top levels as well. Again, beautiful accumulation, bounced off of that many times, came back, retested, wasn't happy, slammed through it, came back up, retested. We're exactly there. If this US dollar is going to have a breather today, that's going to be it for US dollar yen, somewhere around there. We're just filling this propulsion gap. We've left gaps down here to come back and retest as well. But yeah, nice looking on the hourly. We're right up where a lot of people are going to jump in on this. Remember the herd mentality that I keep talking about with our cows. When you see a load of cows in a field and one of the cows lies down, all the other cows go, that's a good idea, I'm going to lie down too. When everybody gets and sees a double top and we see some bearish price action coming in, everyone goes, I'm going to have a bit of that too. And bang, that's what makes the market move. It's us. And not just us. Banks and institutions will also see that happening and they will also jump on board. So all good. Euro US dollar is obviously massively exhausted on the hourly, much more so. But again, be wary of the euro when you long it. Yeah, we didn't get much of a pullback. Whenever we get extended, we don't get much of a pullback. I would expect to at least retest the bottom of that propulsion move off of FOMC or the previous day's low. So for the long on this one, it's short term. And this is what I mean by the EA taking longs for me. The EA is actually long on this at the moment. It got in on M5 reversal alert. Somewhere. I don't know when it was. We'll have a look in a minute. But it's only 0.2% in drawdown. So it's only got one position on. But yeah, that we're looking for short-term pullback moves. So it doesn't matter if you're long in it, if it's a short-term pullback and you've got such a big, strong move. Look how embedded that is on M5. Just strength to the downside. Watch out when you've got, as well, with all of these instruments that have big, strong pushes, watch out for divergence. Yeah. You quite often get divergence on strong moves, because what happens is we tend to go into an accumulation or a tight W formation, and that you'll find the RSI will do a bullish divergence down there. So keep an eye out for bullish divergences on all time frames, like the one we just looked at earlier, when you're looking at these as well, because when these moves start to fade, if you get the RSI showing big strength, but it manages to put in, let me just draw it on so it's simple. So what we would look for is the RSI pushing up like that, and we get a stop hunt type W formation that gives you your bullish divergence. Yeah, so watch out for those on the hourly charts playing out over today, and if you spot those, real good signs of strength. You can spot them very easily on M15 as well. Divergence is great, and it tends to happen a lot after big moves because the buyers are starting to step in. The sellers, it's the end of the sellers basically. What divergence is, it's the end of the sellers trying the very last time to push down, and the buyers going, no, there's loads of us, you're not going to do it. And that's where you get that divergence formation. How can set the EA to take buy or sell in confluence with ADR and higher time frame RSI, such as when a low ADR and a lower RSI, and then only open a buy on the reversal? Right, so let me grab my VPN, a VPS even. So in the EA, what you've just described, and to set that up is very simple. So you say trade direction, long signals, yeah, so it only goes long, and then you would set the higher time frame RSI filter to true, which means it will only take trades when the RSI on the 1 hour chart is below 25. Yeah. And you would set the ADR filter to true, which means it will only take a trade when we've hit a minimum of whatever you want. Start at 100 ADR is the norm. So, so you would set the ADR filter to true. So that is going to say ADR has to be hit at 100%. RSI has to be extended below the 25%. And we are only going to take trades in the long direction. So what has to happen is price has to have pushed down really strong to both push RSI below 25 and to hit ADR 100 today. Then the next reversal alert that you get will be your entry long. If the opposite is true and it hits RSI 75 and it hits ADR 100 to the upside and you get a reversal alert, it won't take the trade because we've told it to take long signals only. Yeah. To answer that question, Rahat, that's how it works. And obviously you set your TPs up and whatever else, however else you want it. So yeah, so that's analysis done. I was going to quickly whiz through and just look at trades on the other accounts, on the EA accounts. So this is H1M5. Right, yes, same will be from sell side. I mean, let both positions work accordingly. All right, so yeah, if basically what you will find, right, is your higher time frame RSI virtually all the time will be hit when the ADR is hit, because to hit ADR to the low, we've got to have a really fast, strong move, haven't we, in a day? That is automatically going to take your RSI down. But what it could do, let's say the RSI was extended above 75 and we got a big push down to hit ADR to the downside. What it might do is only take the RSI down to somewhere like 36, for example. So I have my RSI on the 1 hour set to 25.75 because I want to make sure that when I'm getting in, it's proper, real extended. So you can set it to trade both directions, and it will only do really strong moves in that way and really strong moves in that way. Yeah. But it's entirely up to you how you do it. So yesterday was the 26th. So we had one trade closed out yesterday, which was pound US dollar. RSI 1 hour extension, M15 reversal alert got out yesterday on that one. This is exactly the what I was just describing about that W formation and divergence. I wasn't even looking at the RSI. I can tell there's divergence on it by the formation. Yeah. That low there, that low there. Bullish divergence. And that is basically a liquidity run of the previous day's low, forming an uneven W formation. Yeah, with divergence. Best setup in the world. And if you've got 4 hour higher time frame on your side as well, even better. So this was obviously taken because the hourly got extended. Is this the right account? Hang on. Let me just make sure I'm in the right account. This is 370, which is H1M5, yeah. So yeah, this was an M5 entry. Let's see about. And then obviously exit up there. So nice little trade there. That's the only one we had yesterday on that one. This is 579. This is H4M15 mean reversion. So we had quite a few closed out yesterday. As you can see, did 2.6% yesterday. So CAD-yen. Let's do M15. So that was 3 positions. So H4, we got extended. Initial entry, second, third entry. And exit. Again, keep an eye on divergence, especially when we get these big strong moves. It's really, really, really good signal. Yeah, massive bullish divergence. And you tend to get the bullish divergences. They tend to appear at peak formation lows. It tends to be at the very, very bottom. So if you only want to take A+ setups, there's no divergence filter in the EA, but you do this manually. Wait for divergence. It's really, really good indicator. How about a combination of H4, 25.75 and M5 for mean reversion? Try it. Stick it in the strategy tester and see how it gets on. I have never tested M5 with H4 with 25.75. I would imagine you will get into positions faster, obviously, because you're on M5 instead of M15, so you're going to get more reversal alerts. But as long as your distancing is the same, then what you'll probably find is you don't get much of a different result, because you're going to get reversal alerts a little bit earlier, that's all. So you would probably here, if you were using M5 instead of M15, you would have probably got in there. That one you'd have probably got in down here, and that one you'd have probably got in down there. So I think you'll find that's probably the only difference. But test it, right? Stick it in the strategy tester and see what the difference is between M15 and M5 entry. It's very simple to do. Take you a while. Phil, I don't know. I know you don't trade gold, but thought I would share some backtest results from the EA using M5 H1 mean reversion, aiming for half an ADR target over 12 months. It returned 126% with 26% drawdown. Okay, I might start trading gold again. I'm not going to do it. I'm not doing it. That's with 75-25 extension. So is that the stock H1M5 mean reversion set file that I put on the blog? I don't trade gold, so I've never tested it on gold. 126% return in 12 months. That's good. But again, going back to what I said earlier, guys, yeah, that's 126% return, right? So 126 divided by 12. That is 10.5% per month, right? That's a normal trader returning 10% a month. So that is not an outlandish return. It sounds outlandish, but that is normal. Off of one instrument, though, that is impressive, I must say. So, yeah. Maybe I'll test that and stick a blog post up on that. But I just don't touch gold, so it's not even coming to my onto my radar. But, yeah, no, that's good. Thanks for letting me know about that, Phil. I will go and do a bit of testing on it. So CAD Yen, New Zealand dollar Swiss, we closed out yesterday as well. Again, similar play, 4-hour extension. We went into consolidation. We had a good couple of pushes back out on the pullback. Again, same thing. Extended. We got a bigger extension, and we're now doing the profit take. Yeah, so everybody that sold here didn't get out of their positions. They added to them. So looking from a bank's perspective or an institutional perspective, yeah, they pushed down, accumulated, pushed down. So they went short, added to their positions, chose a second leg, and now they're doing a profit take on both of those moves. We're getting out on the profit take. The sellers becoming buyers. Aussie yen got out of that. Pound yen got out of that. That pound yen was a pain. So again, H4 extension. Sorry, that was the one I got out of yesterday. This is not that one. There's two trades here. I don't know. There's multiple trades there. There's obviously one from one of the other EAs that's taken the same trade, and pound yen got out of that one. Again, similar position. So I think what these are, we're seeing multiple trades here. I think some of these are the hourly M5 entries, and some of these are the H4 M15. So you can see how similar they are, which is why I say as well, don't trade all of the strategies across all pairs, because you are just going to get into bigger drawdown. And in the same positions a lot of the time. H1 M5 is more aggressive and gets in quicker. H4 M15 is getting in slower and more ploddy. Yeah, so you get different results from each EA. So 12% so far this month off of H4 M15. Then we've got H4 M15 pullback. So this is trading only in line with trend direction. So Aussie dollar, we had, what did we get yesterday? 1.3. So CAD yen, 3 positions on that one. Let me just open a new chart, because that we haven't got loads of arrows on, so we can see what we're doing. CAD yen. Yeah. So those there. This is obviously in line with the 72 moving average, and with this one we only look at 40-60, so it's a much more aggressive trend continuation strategy. And Aussie dollar yen, again, same sort of thing. So we were below 60 level, initial entry. This is using the actual daily moving averages. So where this is, because this is an approximation on my chart here, where you've got this moving average here, which is the 432. It's an approximation of the daily. So where it's just slightly below the moving average, and it should obviously be longing above the moving average, if you look at the daily chart, it would actually, moving average will be down here. You can't get it exact because obviously it's taken into account candles and candle movement on the lower time frame, but it's roughly where the daily and the 4 hourly would appear. So easier to see. So yeah, entries on M15 obviously on that one. All out. That's that one. So that banked nicely yesterday. And H4 M15 mean reversion in line with COT bias did 1.8% as well. So we closed the US dollar yen on that one. That's a lovely little trade. Look. Oops. So nice push up. Euro yen. 3 positions on that one. Closed out nicely. Just about, look. And this is what I say about the euro. Yeah, if you're going to long the euro, just be careful. The reason this is longing the euro and shorting the euro is because euro yen has a negative bias. So we're taking trades in both directions. There is no COT bias on euro yen. It's neutral. But you see the pullbacks. Yeah, just got to be so careful with the yen, with the euro. You just get these tiny little pullbacks and big pushes down. So that's why we're targeting where we're targeting with the EA on that. Pound yen, same thing, and a CAD yen. So similar trades, all out. So yeah, so that's all the EAs, what the EA's been doing and up to. So nicely banked. So I think all the EAs together, obviously you wouldn't run all of them. You could run all of them. Just make sure you've got a big enough account and you're making sure you're monitoring these for drawdown, obviously. But so I think in total, the EA this month so far has done about 40% or something across all 4 strategies. But I might add gold into that now, from what Phil said. So I'll go and do a little bit of investigation into that. Sounds interesting. Right, so that's all I've got for you for this morning. News-wise today, be aware, before we come on at 2 o'clock, we've got GDP for the US dollar. So we may get a decent movement on that. So just be aware of your US dollar pairs and what they're reaching for. Look at where they take it if we do get a pullback off of it. So US dollar's still going by the looks of things this morning, petering out a little bit. Lovely symmetrical triangle going in there, and I think we've got divergence on this. Can't really tell on M15, can you? Because it's just we've definitely got divergence, because this is coming down and this isn't. So it is divergence, but you can't really use divergence on an embedded RSI. It's got to be you've got to have some movement to be able to draw the divergence on. It's just flatlined. So that thing's due a pop. When it pops, it's going to pop quite hard. So I would imagine we're probably going to get weakness on the US dollar off the back of GDP, which will allow them to pull back. But we'll see. Darmond, only 26%. What's that? Only 26%. Did I say 26% return? Or 26% drawdown you're talking about with the gold? Yeah. Yeah, I mean, that's a fairly big drawdown, but think, I liken gold to an indice. With my Forex pairs, when I'm trading Forex, there's no drawdown on this because it's flat, but when I'm trading FX pairs, I have a limit on drawdown on the FX pairs. So when something's getting to around about 2.5% drawdown on an individual instrument, I then start to look at it for drawdown control and start to do a little bit more analysis into it to see, right, why has this gone so far? And where are we likely to be heading so that I can figure out where I can get in aggressively. With FX pairs, they're not that prone to moving that fast. And obviously we're scaling very, 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 very slowly with them. With things like indices, so S&P, my S&P investment account, I'm happy for that to go into 25% drawdown at any point in the year, because it is treated as one account. So it's one account, yeah, and I treat it like a portfolio on its own. So the S&P, yeah, we know the S&P does that, and then it does little pullbacks, and then it pushes, and then it does pullbacks and pushes, and that's what it does. Typically, I get somewhere around 10 to 15%, and then we get the next push, and then I make a load more money. Occasionally, we get a big one, and I get to around about 20 to 25%. I start to then think, right, I need to start scaling out of some of this, which is exactly what I did on Monday or Friday last week, whenever it was. I got out of those S&Ps because it was not looking good. So I'm happy to treat the S&P as its own account, its own instrument, and it can use that money to go into drawdown. Most funds, hedge funds, and pension funds and investment firms out there, if you look at their returns yearly, they will all have a drawdown of 10, 15, 20% on their fund. So if you've got a £1 million fund, I mean, that's tiny, but if you had a £1 million fund, it's not unusual for 200k of that to be drawn down. It's quite normal. So when you talk about 26% drawdown on an individual instrument when you're running an EA on it, that isn't actually a problem. 26 is not bad. S&P 10, 15, 20% at a time on drawdown, not bad. Yeah. On an individual FX pair, when you're running a portfolio of up to 8 instruments, 20% is totally unacceptable. Because if they all go 20% in drawdown and you've got 5 pairs on, you've blown the account. You can't do it. So on FX pairs, I'm looking at 3%, and then I'm starting aggressive drawdown control. That's my kind of mental trigger to start using some of this profit to get rid of some of this drawdown. Yeah. So if you treat gold just like one instrument, i.e. you just stick an account up, you put 5k in an account, you stick gold EA on there, stick the EA on there trading gold, and you sit there for an entire year and you accept the fact that likely at some point 1,500 quid of that money is going to be drawn down. But if you get at the end of that year, 126%, so it'd be up to 10,250 quid. Yeah, and you've only gone 1,500 quid into drawdown. Is that an acceptable investment? I think so. If someone said to me, give me 2,600 or give me 2,000 quid and I'll give you 12 grand back next year, I'd snap their arm off. And so would most investment firms out there. If you showed them 126 return off a 26% drawdown, they'd be like, I'm interested. So, think of it that way. When you're doing any EA backtesting with my EA or any EA out there, look at the drawdown. And if the drawdown is way higher than you wanted, but the return is also way higher than you wanted, you don't use that as a portfolio. You put that on an account on its own and let that run on its own. You give it much more money. If you get to 26% and all of a sudden it pops down to 35%, this year might be worse than previous and nothing you can do about it. Worst case scenario, you're going to lose 35% of your account, but on the promise of potentially getting 126% return. It's trading. That's the way it works. I'd be happy with that. Be very happy with that. And like I say, my drawdown, you've seen me many times in the live room when I've been running my FX portfolios. 15% drawdown on my account is quite normal. I'm expecting it to, because that's what my account is there for. It's there to be drawn down into to help me make money. If you got into every single trade and it just went up and you never had any drawdown, you're a multi-millionaire, aren't you? No trader does that. Every trader has drawdown. Whether you're using a stop loss and getting chopped to pieces 1,000 times and getting that 5-to-1 which takes you back into profit, or whether you're a position trader and your account is just going into drawdown and losing nothing and then recovering from drawdown, it doesn't matter. But drawdown is there to be used and it's your friend. You need to see it as that. And I'll cover that in the bootcamp obviously as well. And this is where the prop firms, going back to what I started this live room with the prop firms and the investment and the money you need to become a trader, those prop firms set you drawdown limits of 5%, 10% on an aggressive account, right? There is very, very, very few traders out there that will not go into more than 5% drawdown on their account in any 1 month, in a quarter. It's the norm. The prop firms know that. They know even if you have a lucky streak for 3 weeks and you only go into 2% drawdown, you ain't going to do that next month. And if you do it next month, brilliant, we'll give you some money. But the month after that, you're going to go wrong. Because you can't sustain an account with 5% drawdown. And they know that. You can if you only get a return of 5% a year. Or a quarter or whatever. Yeah. So you can obviously stay within 5% drawdown, but you would have to be super conservative with your lot sizing. And that's not actually what we want to do, is it, as traders? Phil, looking at the report, that was only at one point in the year, Diamond. Most of the year was very, very stable. Yeah, you will find that. Your max drawdown is obviously the max drawdown. You'll be in drawdown a lot with an EA. With any trading strategy, you will be in drawdown somewhere between X% to Y% constantly. But you'll have a max. And if the max is only 26, fantastic. That's really, really good. I was sad. I actually watched the backtester for hours at the weekend. I've been there, Phil. I've fallen asleep in my chair watching the backtester run, woken up, gone, oh, I'm 6 weeks ahead of where I was when I fell asleep. It happens. That shows dedication, Phil. That's good. That's dedication. You're going to make it. You're putting in the time. That's what it's all about, putting in the time. Right, I'm going to leave it there, guys. I'll be back on at 2 o'clock this afternoon. There's that gap fill. See, I should have held it, shouldn't I? Should have held it. There's my TP. Look. There was my TP. I got out just under my TP. And then it went up and hit my TP. Always does. I was only playing the gap fill. But yeah. I don't care. Don't care. Right, I'm going to leave it there. Anybody needs anything, come in the Telegram group. I'm always in the Telegram group. I will be in there all the time. If anybody messages you in Telegram, pretending to be me or trying to sell you a signal service or a product cheaper than expected, it's a scam. I don't do it. Don't get scammed. There's millions of people out there scamming. Just don't do it. And if you need anything, obviously come in the Telegram group. Give us a thumbs up if you like the stream. I'll be back at 2 o'clock. Anything you need, let me know. And hopefully have a good, profitable morning. And I will see you then.